What is up, traders? Today I am going to be talking about a simple strategy and a mechanical rule set that you can actually use to always establish a relatively accurate daily bias. This is going to be especially useful when you are consistently failing to actually establish your daily bias, or you seem to be making mistakes quite often. This method of forming a daily bias has a really high accuracy. You will notice that I'm also going to be doing some backtesting, and during the backtesting you will see that the accuracy of this system is actually pretty great. So what I did just now is I went back in time on FX replay, so there is no way for me to actually have hindsight data. And what I'm going to be doing is I am going to go through some data from it seems the 5th of May, and I'm going to be backtesting it for some time. The method here is really simple. What we are going to be doing is we are going to be looking at the 1 hour time frame. Let's say that price action is looking bearish. So we are consistently creating lower lows and lower highs. So let me quickly mark that out for you. If this is new to you, if this is basic market structure, if this is something you're struggling with, I will link a video down below in the description so you can actually check that out and learn to properly map out your own market structure, which is mandatory when it comes down to technical analysis, especially for SMC and ICT trading strategies. So what we are seeing here is that we create a low, we have a high, we have a lower low, we have a lower high, and then we create a lower low again. So we are in a bearish trend. And since we are using the 1 hour time frame, we can know that this trend is quite reliable. The 1 hour trend usually gets respected, especially if we look at the major pairs like Euro USD and GBP USD and stuff like that. So what we are going to be doing mainly right now is establish a bearish bias. So we are only going to be looking for short trades, but there is more. What do we notice when we have certain pullbacks? We notice that we always return to a premium, or at least return to around equilibrium. And this is measurable by simply grabbing your Fib tool. So it is the Fibonacci tool. And if we go to the settings, you basically deselect everything. So we're going to open the settings of the Fib tool, and all we are going to mark are the following three levels. We are going to have the 0 level, the 1 level, and the 0.5 level. The 0.5 level is going to be our equilibrium, which means that price is in perfect balance there, right? So if we have a downtrend, we can assume that every time the price goes above the 50% level, that we are in a premium level. And at that point, we can start looking for high probability trade setups. So then we would go to the lower time frame and look for our entry pattern, which I will also show in just a little bit, and do some backtesting on. So that's pretty simple. Now let's actually go over to the bullish example. So on the bullish example, what we would be looking for is higher highs and higher lows. And as we can see, we are forming these higher highs and higher lows in this type of pattern. So we have a high, we have a low, we have a higher high, a higher low, a higher high, and again, a higher low. Now, once again, what we are going to be doing is we are going to be pulling the Fib tool over these legs, right? So as we can see, here price returns to a discount and then rallies up again. If we pull the Fib here again to this low right here, then you can also see that price is pulling back to a discount before rallying back up. And the same process keeps on happening, right? Of course, this is drawn out, and the market is not going to be picture perfect like this every single time, right? So I'm going to show you some real life examples in just a moment. Now, there is of course a third state of the market, which is going to be consolidation or a ranging market. So the market will look something like this. At that point, it is even more simple. What we are going to do is we are going to connect the highs and the lows, or just the highest point and the lowest point of the range that has been going on for quite some time. And we are going to define our premium and discount like this. So everything above the middle is going to be premium, and everything below the middle or the equilibrium is going to be discount. And in the premium zone, we are only going to be catching shorts, and in the discounted zone, we are only going to be catching longs. Now, this in and of by itself is going to give you an edge already. I'm not saying it's going to be a massive edge, but overall in your trading, if you take trades like this, you're going to be able to catch more R, so risk to reward, and your trades overall will have a really big likelihood of actually playing out. And now the question would be, and that's the only step we have left in our strategy, is when do we shift our bias? And that's pretty simple. We are going to shift our bias as soon as we have 2 breaks of structure or a change of character to the opposite side, which would mean something like this. We break this structure right here, we then pull back, and then we break another bit of structure. So right here we can see that we break structure to the downside again, and then right here we break structure one more time, right? So we have a change of character followed by another break of structure. At this point we can assume that the trend is likely to reverse. So at that point, what will we do? We will basically pull our Fib tool again, and we will be trying to catch a short in the premium zone and take it to the downside. Same story for the bearish trend to a bullish trend. So what we would like to see is the following. We first have a change of character right here, or a market structure shift. And then right here, we have another break of structure, also breaking this previous high that we established as a strong high. So at this point, we have a change of character, and we actually have our break of structure following that. Those are the simple rules, and the rules for it are like this because we can always see that the 1 hour trends are pretty consistent. So we do notice that sometimes we might wick because of course the market is being manipulated. So we will see that we sometimes wick one of these lows, but that doesn't mean that the trend is about to change. And if you use an approach like this, you will avoid getting trapped in a fake out or a false reversal. And then there is one state where you're not going to be trading, and that it will be when the market is unclear. When the market is making higher highs and lower lows at the same time, and it is really doing this harmonic pattern going up and down, you either want to see a clear consolidation, a clear bearish trend, or a clean shift to a bullish trend, or a bullish trend followed by a clear shift to the bearish side. Let's actually go over some real life examples here. So if I look at this market, if we look at Thursday, for example, what do we see? We see that we have a higher high here. We then seem to break structure down here. So we have a lower low, lower high, lower low. So at this point, I can assume that we are bearish. Now here we create a high, but we do not break that low here just yet. So at this point, this is going to be our higher high. We then create a lower low. And now what do we expect? We expect price to continue rallying down on Monday. So what do? We mark out our premium and discounted zones, just like this. And then we would wait for us to enter a session that we would trade in. All right, so as we can see on the chart right here, if I quickly go back to the 15 minutes, what do we see? We still are in our premium zone. We have not violated this high right here, and definitely not the highs above that. So what we're going to be doing is we are going to be looking for shorts. We are now in a really high premium zone. So at that point, we can start looking for optimal shorts. What I am personally going to be looking for is one of my entry models. They are mostly based on ICT concepts and SMC concepts. I will try to explain them, but I'm not going to cover them in depth. But that's basically what I am going to be looking for. All right, so as we can see, price slightly went above our 15-minute zone, but it didn't really break through it, which indicates that we could have a potential reaction to some of that liquidity that is resting there. So what I would like to see now is for price to actually take out liquidity and then rally on down with strong displacement. Let's wait for that to happen. Let's see if we actually get that. So now, as you can see, we are building up quite a bit of liquidity right here. And we also have liquidity left from that high. But if we look to the left-hand side right here, we didn't really show any indication that the market is going to want to reverse at this point. So what we would do is wait for that liquidity to actually be swept. And as you can see, we sweep liquidity here. We just respect this high right here, or just close above it. And yes, indeed, we just close above that. So we take the liquidity from that high, and then we have a really, really strong reaction to the downside. So at this point, I would be interested in taking a short as soon as an opportunity for a short actually arises. And it seems like the market is just rallying down without us, which is not a problem. At this point, I again want to be entering from a premium zone and not from a discounted zone. So what I will be doing is I will be using the Fib tool once again on the lower time frame to actually establish a possible entry right here on the 1 minute time frame. And it seems like price is just going lower and lower. I am only interested in entries right here in that premium zone. And then it seems like price is actually moving back up. So what I will do right now, if I was trading this live, I would go and set a limit order short right here. I would cover that high and probably, to account for spreads, another pip. And as for my target, I would probably target something like these lows, or if I zoom out, possibly even the Asian lows around this area right here. So that would be the trade for the day. And all the elements for my setup are here, all the confluences that I need. We had a sweep of liquidity, we had displacement to the downside, and we had a market structure shift. If you want to learn more about these, I do have a little course that I offer. You can check the links for that out in the description. It is combined with an elite membership, which is basically premium support and guidance throughout everything from the course. And of course, after you finish the course, we will also do trade reviews and so much more. So what we will do in this case, let's say we risk 2% on this trade. Let's set that limit order and see if we actually get a fill here and we get tagged into the market. Now we do get a little bit of drawdown here. That's quite okay. And why is this okay? Because if we go back to the 1 hour, what do we see? If we expect the market to continue rallying on down, then right here we are even above that premium zone. So at this point, we would consider this as a really strong premium zone. We expected this high to be protected. So what is it likely doing now, especially after the reaction that we noticed? It is probably grabbing liquidity from that high. So now once we grab that liquidity, we do not expect this high right here to be violated once again because this high already took out liquidity. Let's see, and the market is starting to really go with us. So let's actually mark our entry here. So it would have been filled right here. And as you can see, we are on FX replay and we start rallying on down. We could possibly start thinking about taking partials somewhere over here. I probably would as soon as we take out one of these legs right here. But for the sake of the video, I'm going to just let this run. But I do suspect that after taking this out, we will actually start heading up because these order blocks are respecting each other. And as you can see, that's the reaction that I expected. We start trading back up. But I'm pretty confident that this high will not be broken. I will not move my stop to break even yet either. And at this point, I would actually move my stop to break even, because our market structure has clearly shifted with strong displacement. If price were to come up and break this high, we would likely go for the liquidity that we induced here now, because there are probably going to be stops above this and above here. So I wouldn't want to be in it for a reversal anymore. And as you can see, we are really close to our target here. And at this point, I would probably just log off the charts and let this trade run. And I would probably close this by 4 p.m. as soon as we notice that the spread hours are going to start hitting. So let's actually go to the 15-minute to skip this trade ahead. So right here is 4 p.m. If the trade is still open by then, and it isn't, we hit TP for almost 5 hours. So that's a pretty decent trade, I would say. We could look at that drawdown and see what level it did pull to, but that's more going to be something for the elite members. Some of that secret sauce that I will only be sharing with them. But again, it was a pretty decent trade, all with that little strategy that we had. Right now, I would also not be interested in trades for the day anymore. I only take entries till around 11 a.m. and then I'm done, really. Then I don't really look at new setups, and I would probably just go and enjoy my day. And then right here, as we can see, London is about to get started. So the London session just started. And if we hop on to the 1 hour chart, what do we see? We are in a deeply discounted zone. If we pull our Fib tool, and let's actually remove this old Fib tool here, which is no longer relevant. We are now going to pull it from this high up to this low. And what we see is that we are in a deeply discounted zone. So what you could do is catch reversal trades here when you expect a reversal to equilibrium, or you could just wait, which I do recommend to beginners. You could just wait till we actually get into a premium zone. Let me mark that out. So everything above that would be premium, and that's when you're going to want to catch a trade short. So for now, no trades. It could be that this is going to be a rangy day, so a no trade day. Let's see. As you can see, we do not actually pull into that premium zone, so we get no trades at this point. And then what I'll showcase right now is something a bit more difficult. But as you can see, if we look back on the 1 hour, we now actually broke structure right here. We broke this bit of structure, which means that we are in a deeply discounted zone, and I am expecting a little bit of a pullback, not per se to equilibrium, but just some sort of pullback to fill up these imbalances that we left. So at this point, I would be looking for a short, especially because we are early in the New York session. So let's actually start looking for that. At this point, I'm not really convinced. I do not consider this as a market structure shift to the slightest. It seems like we are inducing liquidity on the downside here. So I actually expect that we are going to continue going even lower. I would likely catch a short here, if possible, expecting a rally down to a next point of liquidity on the sell side. Let's see what happens. So as we can see, we did delve quite a bit deeper here. Now we can see that price is actually exhausting right here. Price really isn't able to push higher that much. At this point, I would likely consider a long. This is not your typical ICT trade, but I believe that if you watch the course, you will probably know what I am playing here. And when it comes to my target, in this case, I'm not going to target liquidity because we already swept liquidity right here. So I basically doubt that we will actually take this out. So I think that this high right here is going to be protected and we do not really violate that, at least not in a session. So what I would be targeting is probably going to be some 5-minute imbalance, which it seems like we have right here. This would make up for, let's try to make 2.5 R of it. But this is going to be a 2.5 R trade if we get filled and do not take a loss, of course. But I would say that this is a pretty high probable setup. Seem to get filled. And if we do not react the way that I wanted us to, might close the trade, but this is a good reaction so far. Quite happy with this. Gonna let this run and hope to hit our profit target. And as we can see, we hit our profit target and we could have even bargained the market for a little bit more. And then let's see if my prediction was right, that we are actually going to respect this level and bounce off of it. And it seems like we are so far. Yeah, so indeed, we seem to really be respecting that high. Cool, let's now move to the higher time frame again and skip to the next day to hopefully be able to catch a trade there. And right here, we are close to 2 p.m. All right, so since the London session is about to start, we're going to actually have to define our premium and discount zone once again. And if we actually take a look at the structure that we created, we had this little pullback right here, which I count as a decent enough pullback, especially because it was in a session. I would count my premium and discount zone something like this. So let me quickly map out the structure for you once again. We had this minor pullback here. We had this low that was major structure that actually violated. This I wouldn't really count as a decent pullback. Some people would trade this as an order block, but since it didn't sweep liquidity, I wouldn't be interested. And if you look at this high, we swept liquidity right here. So to me, that is a valid high, a strong high. That's also something that I cover in the course in depth, of course. So what I will be doing right now is actually look for a short if we get above this high that we had from the Asian session right here, the high from midnight. And then I will try to catch a potential short if the setup presents itself on the lower time frames, of course. So as you can see, price right here is above equilibrium. Seems like the market is willing to go quite a bit higher here. Still making higher highs. Now I'm starting to get interested. I'm starting to get interested because we actually respected this low and set up a low that respected this low right here, which basically induces liquidity. We also induced liquidity right here, which is now being swept. So the next logical target would for us to be take out that liquidity that we induced right there. Plus we have a bunch of liquidity induced right here that all respected each other. So if we now start taking buy side liquidity, I'm really interested in actually taking shorts. So let's see if the market wants to give us short. To me, the low that actually broke that top liquidity would be this, or we could use this inside bar as a reference, which I like to use. So as soon as we break that low, I would be interested in taking shorts because that would be a market structure shift to me. And we seem to actually break market structure. And if we take a look to this whole leg, we are actually in quite a premium zone, especially when it comes to the equilibrium. So I am going to actually be taking a short on the first fair value gap that actually sets up. So we have one right here. I'm gonna wait and see if price actually taps into it. Let's set a short order right here. And as for our target, we are going to be targeting the lows and possibly even more liquidity, but we will see about that. So again, let's smack on 2% risk. And we seem to create a fair value gap even lower. And given that we didn't break market structure yet, I am not going to pull my PDZ array on this leg. I'm going to use this big leg as a reference. So again, this right here would be my premium and discount zone array. So what I would be doing here is I would actually set my order right here. And in this case, we don't really have a fair value gap anymore. So if price were to go higher, I would think that price is likely going to take that high again. So I wouldn't want to be in my position. So I will take a short like this and manage my stop right above that fair value gap right there. We also have these double wicks, which usually make up for a small little order block. It might hold. Let's see what happens here. We get filled and price seems to start rallying down. And we actually hit full take profit in just a few minutes. And this just shows the strength of the strategy, guys, doesn't it? I'm willing to show you guys one more example. In this case, I think we caught the main move of London. So let's see if the New York session actually wants to present us with an opportunity. So we're going to wait for 7 a.m. to hit here. And it is 7 a.m. now. We are pretty discounted. We are still bearish. So we're not going to try and be a hero and catch any trades right here. I'm going to wait till we actually pop back into that premium zone. Ooh. And we definitely pop into that premium zone, don't we? So if we take a look at the major structure, what can we see? We created a low here, and this is going to be our high. So if we violate this and this high, we might want to switch bullish, but I think this is going to be a news event. So we can expect that it's going to be sweeping some liquidity. So now it's sweeping all of this liquidity, might go for this liquidity, but still my bias would be bearish here. Let's actually see what happens. I would be okay with seeing a violation of that top level, but I would not be okay if it goes way further than that. What I would be waiting for right now is strong displacement to the downside, which we do get, and we immediately have a market structure shift. So we have our market structure shift. We have our high that is being violated here. So we have a perfect ICT setup. My short would go right here. And of course, because we are using the core ICT setup model, what we should do is use our PDZ array. And I was thinking that this fair value gap would actually be within the 50%, which is actually going to be this one. So our entry would look something like this. And for our target, I would be targeting the nearest liquidity. So I would not be going for this. That would be pretty optimistic, although we could do that. I usually don't do that. I usually target something around equilibrium. So I would be targeting this right here for 3.9R, which is decent. Let's see what happens here. Might actually not get filled on this one. Oh, seems like we get tagged in, so that premium FEG actually gets tapped into. Now I would probably move my stop to around break even. I wouldn't want to get caught in drawdown or take a loss on this one just because we are running in quite a bit of profit, and we also created some decent bearish structure. So having this high being violated wouldn't really make sense. I would be okay with this being violated and us possibly filling up this FEG, but not really with price taking out where my entry was. And as we can see, we actually hit full profit again. And all of these trades, and I just made in front of your eyes, I made almost 40K here. All of these trades were with this really simple strategy. It's really easy. Of course, the confirmation entries and the entries that I'm showing, they are something that I am teaching in a course. But other than that, it's all pretty straightforward. The strategy itself is pretty simple. And trust me, you do not need anything else than this to establish a daily bias. If you use this as your means to form a daily bias, you're going to see amazing results. Trust me on that. If you do have any questions about it, feel free to hit me up on Discord. The Discord server is completely free, by the way. We do have a section for the elite members where you get some more personal support and so on. You can find information about that in the Discord channel under the elite program or on the website. So feel free to check that out. I hope to see you guys in the free Discord. Would love to have you there. There's a lot of really bright people in there. So if you're looking for like-minded people, feel free to join. If the video helped you in any way, I would really appreciate some love. Maybe a subscribe, a comment, a like. And I hope to see you guys in the next video. Thank you for watching. Bye-bye.